Hello everyone and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 4th of May, 2023. Alright everyone, let's get into it. So we have an update from Paul Grewal here, who is the Chief Legal Officer at Coinbase. Now I discussed, I think it was maybe a few days ago or last week, that Coinbase sued the SEC and basically said, hey, we want to reply to something they had kind of filed, I think quite a while ago now, maybe over a year ago now. And well, there is an update on this. So Paul put out a tweet saying, the Third Circuit just issued a text-only order directing the SEC to file a response to our mandamus petition within 10 days and gave us 7 days for a reply. Here's the text of the order. At the direction of the court, respondent is ordered to file an answer to the petition for writ of mandamus within 10 days of the date of this order. Petitioner may file a reply to the response within 7 days of the date of filing of the response. This is pretty funny because it's kind of like, okay, is the SEC actually going to reply within these 10 days? What are the consequences for not replying? I don't know, obviously, because I'm not a lawyer, and the legal system is quite complex here, but this is a pretty short time frame. So we'll know within 10 days if the SEC chooses to reply to this mandamus petition that Coinbase has been trying to get them to reply to for, as I said, like quite a while now. I think over a year at this stage. And of course, Coinbase then has 7 days to issue a reply to that, which I'm sure they'll do in a speedy manner because they are the ones that want to move this along as fast as possible. Now, the actual details of what they asked for, really, it just speaks at the heart of everything that they've been asking for a long time now. More guidance on your regulatory front. More kind of like things put in place, more easier to follow rules, basically any kind of help that the SEC can give Coinbase and other crypto companies to actually stay on the right side of regulations and the right side of the law, especially when it comes to deeming assets to be securities or not. So we'll have to see what this reply is here. Look, honestly, if they do reply, if the SEC does reply to this, I expect it to be some kind of canned reply. I don't expect it to be anything substantial. There is definitely going to be a lot of back and forth here, and the most annoying bit is that in the legal process that generally is this. It's just back and forth, slow moving, especially when you are dealing with something like the SEC, where there's just full of bureaucracy, and especially the current SEC, where they don't seem interested in actually changing anything for the, on the positive side for crypto, and they feel like just putting their, I guess, guard up the whole time, and basically letting all the crypto companies leave the US, as I've discussed a lot on the refill before. But I'll keep you updated on the SEC's response here, and we'll see if they actually do respond. All right, so Tim Beiko has published the latest AllCoreDevs update. So he, on HackMD, so he used to publish these quite a lot. Now this is update 15. I haven't seen one in a little while. I don't know how long it's been, but as Tim Beiko said here, it has been a while. So in this update, he talks about Shapella going live, in how they're in the final stages of planning the Dencun upgrade, and I've talked about that a lot recently about how 4844 is the driver of the upgrade, and there are a bunch of other EIPs that are passengers, some that are already included, some that are still considered for inclusion, but of course these things aren't 100% going to go in. They could end up being dropped. We just have to see how that kind of plays out there. And then he also announces him talking about Ethereum governance at a few places in the summer, with a full list below of that. So it's quite a healthy update. I highly recommend giving it a read, of course, and checking out the bottom here where Tim Beiko will be doing a bunch of remote talks around Ethereum governance, which I think should be pretty interesting. But yeah, I mean, I've said it before and I'll say it again. The Ethereum development machine right now at the core protocol is such a well-oiled machine. It is moving at such an amazing pace, and I actually am still in disbelief about how amazing of a pace it's moving in, because we went straight from Shapella to Dencun like nothing had really happened. I mean, it's kind of like there is no meandering around. There is no kind of like being lost in the woods, just trying to figure out where to go next. Everyone kind of knows where to go next. There is a defined roadmap. There is a plan. Everyone is very, very motivated to build this stuff out, to get it onto mainnet, and everyone really wants to stick to that 6-month or so network upgrade cadence, which I think is just amazing, because that means that we should get Dencun before the year is up. If we go from April to 6 months from April, May, June, July, August, September, October, right? October, November could be when we get Dencun. It's not going to happen in December. I think obviously because of the holiday period, you don't want to be doing network upgrades during that time, but October, November seems ripe there. And then after that, we'll go into the new year and we might have another upgrade in April again, right? right? So it just depends, obviously, if things are ready and are not ready. I think the next upgrade after Dencun will be one that probably involves Verkle trees or some kind of like some form of it. I don't think PBS will be in that upgrade. Maybe MEV burn is in that upgrade. I don't know if the MEV burn design that they end up going with will require PBS. It may require ePBS, which is like a modified version of it. So there are a lot of open questions still, but there are people working on that. There are people working on the things that are coming after Dencun, which is obviously very promising. But anyway, you can check out Tim Byko's blog post for yourself. I'll link it in the YouTube description below. All right, so Frederick here from the Ethereum Foundation has published a blog post titled Secured Number 5 Public Vulnerability Disclosures Update. So this is just an update for all of you, I guess, aspiring security researchers out there who like to keep on top of these stuff. But even if you want to just give it a read if you're curious with what's going on in the vulnerability disclosures world, then this is for you. So there is a list here where the blog post says, since the last vulnerability disclosure has been quite eventful with events such as the merge and the max bounty reward increased to $250,000. The highest paid reward during this period was $50,000, and this was awarded to someone called Sayo for reporting an issue in which Lighthouse beacon nodes crashed via malicious blocks by range messages containing an overly large count value. And you can read more about the vulnerability here. So there hasn't been any vulnerability that has been found that has paid the maximum bounty yet, which is $250,000. But if you can find a critical bug in any of these client softwares that will justify that payment, then you stand to make $250,000 for finding that bug. And the clients that are covered are Aragon, Geth, Lodestar, Nethermind, Lighthouse, Prism, Teku, Besu, and Nimbus. All the ones that we are obviously very familiar with and all the ones that are being used actively on the network. So you can read this blog post for details on that, as well as details on vulnerabilities that have been disclosed up until now, and you can learn more about all of that there. Now, speaking of different clients on Ethereum, I did want to touch on client diversity again, and I've got the client diversity kind of site up here, as you can see on your screen. So we have still kind of like stayed around the same when it comes to execution layer client diversity, where Geth is about 63% of the network, Nethermind is about 17%. That kind of chops and changes, every other day. It can go from like 20% Nethermind, 60% Geth, and then back to 63% Geth, 17% Nethermind. The data isn't 100% accurate. It's definitely kind of more of a kind of, I don't know the percentage accuracy I would call it, but it's not 100%, right? So that's why things can move around, but we can get a general idea of what the network looks like, and it's looking quite healthy. Obviously, Geth, we would like Geth to be lower than what it is right now, but there are still a bunch of things that the other clients need to do to get it up to Geth standard, and it's obviously just a time thing as well. Whereas on the consensus layer side of things, things have stayed relatively healthy. We remember quite a while ago now, Prism was the majority of the network. It was like 70 or 80% of the network. Now it's under 40%. Lighthouse is basically the same as Prism at 37.3%. Prism's at 38%. Teku and Nimbus are at 17.4% and 6.3% respectively. And Lodestar is, just went live a few months ago, I think, or not even a few months ago, but they have around 0.7% of the network right now. Now, in an ideal world, we want to see Teku and Nimbus and Lodestar adoption higher than what it is, but I think the current makeup of the consensus layer client diversity is not as good as we're going to get it, but it is pretty good. Like, it's not something to cry about, that's for sure. Whereas in the execution layer side of things, there's still work to be done, and that's being done, obviously, and will continue to be done. I don't see any cause for concern here. I mean, honestly, the biggest concern is when any one client has over 66% of the share, because that means that we could potentially, if there was a bug in that client, finalize on the incorrect bug chain, and it would require a very messy hard fork to fix. And this is like an unscheduled hard fork. This is not a network upgrade. This would be something that would have to be done and coordinated at a moment's notice socially, and it's very, very messy. So as long as it's below 66%, it is obviously not critical. In saying that, it is still not great, because if Geth is at 63% right now, for it to get to 66% is only a 3% growth in market share. Whereas if Geth was at 50%, it would require a 16% growth in market share. So obviously, the lower it is, the harder it is to get it back up to that danger zone, that kind of critical threshold there. So yeah, we want to see that kind of come down more from here, which segues me perfectly into an update from Nethermind. So Nethermind has released their client version at 1.18.0 today, and you can check out what's new at the GitHub repository here. But the major thing, and I've discussed this on the refuel before, is a significant memory usage reduction, or RAM usage reduction here. And you can see it in the chart that I've also showed on the refuel recently about what this looks like. So if you are running the current version 1.17.4 and you upgrade to 1.18.0, you will see here that the memory reduction is pretty massive. It is a 2 to 4 times reduction, I believe, with 4,000 megabytes of memory budget, and a 4 to 7 times reduction with 8,000 megabytes, and with diminishing returns above 16,000 megabytes here, so, or 16 gigabytes, right? So if you are running Nethermind, and you, even if you're not on a resource constrained system, you should still consider upgrading here, and you should still consider upgrading, especially if you're on a resource constrained system, because it means that you'll be able to bring that usage down by a substantial amount here. So that's very cool. There's also a bunch of important stability fixes, improving on sync time and block processing, and progress towards the next hard forks. And there's also a bunch of new features, such as disk space savings for non-validator nodes, configurable startup disk space check, pass-through RocksDBs options, additional metrics output, and some experimental features. A full change list can be found on the GitHub for you to check out, but amazing to see such a substantial upgrade live for Nethermind today. And this goes hand in hand with what I was talking about before with client diversity, about how these clients, the clients other than Geth, I mean, even Geth, they're getting better all the time, right? And the more stable they become, the more resilient they become, the more secure they become, the more adoption they will get. Now, obviously, we would like to see, I mean, Nethermind has already got like a nice healthy chunk of adoption. We would like to see Nethermind, Aragon, and Besu growing at a kind of like similar pace, and Geth going down because of that. But even if we had the same situation that we have on the consensus layer side, where both Geth and Nethermind are around the same percentage, just under 40%, and Aragon and Besu are at what they are today, that would be a lot better than what we currently have, which would obviously still be very, very awesome there. And not to say that Aragon and Besu are bad clients, but when looking at the way that it's played out in the consensus layer, you can kind of see that it's probably going to play out in a similar way on the execution layer once the other clients kind of get to the point where people feel comfortable running them instead of Geth, which is obviously very, very nice to see. So yeah, you can go check out Nethermind's post for yourself on the full change list. I'll link it in the YouTube description below. All right, moving on. So Ether.Fi, the decentralized and non-custodial Ethereum staking protocol, has announced the Phase 1 mainnet launch today. Now, there's a blog post here which is a little bit confusing to me, because they said that their Phase 1 mainnet launch is coming Tuesday, May 2nd, and will consist of delegated staking, but the tweet was put out May 4th. Let's just see the blog post. The blog post was also put out May 4th, so I don't know if they're live right now. I think they are. They may have just forgotten to kind of change this to that they have already launched. They're doing a gradual rollout out of an abundance of caution, and will deploy their own funds first, and then allow larger stakers to participate, and then smaller stakers. They are unfortunately going to restrict US persons from participating in the protocol directly, but US persons who are accredited investors will be able to participate legally through their ETH fund here. Now, they did mention here that they have an audit that's currently under review. I don't think that's live yet, but you can check out the details about that in the blog post as well. But great to see another staking protocol live on the Ethereum mainnet here. As I've said before, there is a huge market opportunity here that Lido proved out very early on, and obviously Rocket Pool has also proved it out, that LSDs are here to stay, and they're the thing that everyone wants. Now, Lido has a pretty large market share that is just ripe for disruption. There's no way that people and entrepreneurs are looking at that market share and being like, oh, well, I'm going to let Lido eat all of that up, when there is no good reason for them to actually eat all of that up. So that's why you're seeing more and more competition come online. Obviously, Rocket Pool has been around for a while, but you also have Swell that just went live. You have Ether.Fi. You have Stakewise. There are others that I'm forgetting right now, but there are plenty out there, and there are going to be more and more coming online. Now, of course, they're not all going to succeed, right? And they're not all going to get large chunks of the network, but enough of them coming online, and some of them doing things like vampire attacking, which is definitely going to happen. And for those of you who don't know, vampire attacking is basically when one protocol takes liquidity from another protocol, usually through the use of token incentives. And this was done very often during DeFi summer in 2020. Most famously, it was done by SushiSwap, a vampire attacking Uniswap. It didn't work out long-term for SushiSwap, but there's no reason why it can't work out long-term for staking protocols or these staking services. But we'll have to see how that plays out. But it's also going to be a slower process for staking staking protocols because of that deposit withdrawal queue. For ETH staked and for validators, but there are ways around that as well, and I'm curious to see what people come up with on that front. But yeah, just great to see, as I said, another staking protocol live today, and you can check out the blog post for full details on that one. All right, so I just realized before, while I was getting the content ready for this episode, that I hadn't spoken about Polynia in quite a while on the Refuel. I used to talk about them all the time. They had a really large effect on my thinking around particularly things like layer 2s and how the modular design for blockchains is the one that is going to win over the monolithic design. Well, they're out with a really interesting new blog post today titled Ethereum L1 zkEVM, which touches on two things. The first thing is that ETH as an asset is being exported to all of the crypto ecosystem as a money and as a store of value. And the second thing is about how Ethereum Layer 1 is scaling. Just because Ethereum L2s are scaling and we have a rollup-centric roadmap doesn't mean ETH L1 isn't scaling as well. So I want to speak to both points, and I think that it will start at the beginning, right? So Polynia makes the point that no matter where ETH is bridged to, whether it's an L2 or a sidechain or another L1, Ethereum is exporting its monetary asset, known as ETH, right, to these other ecosystems. Now, why that's good for ETH, even if it's not an L2, even if it's another L1, is that it reinforces the ETH liquidity effect and also its network effect, and it reinforces ETH as a money and a store of value. So it's a net positive, even if ETH is bridged to other completely separate L1s. And not even the EVM-compatible L1s, even other ones like Solana that aren't EVM-compatible, right, or aren't just forks of Ethereum, it still reinforces its monetary properties and its moneyness and its store of valueness. So I thought that was just a really salient point, but that was not the point of their article. The main point of their article was that they were talking about the concept of enshrined rollups, specifically an enshrined zkEVM at layer 1. Now, this isn't the only way Ethereum L1 is potentially scaling, right? Ethereum L1 is scaling via different means. Vertical trees is scaling Ethereum L1, raising the gas limit because of improvements that can be done at L1 is scaling it. There's a bunch of other things on the roadmap that could potentially scale it as well. So just because the Ethereum ecosystem has gone all in on L2s doesn't mean that we've left L1 for dead. L1 is still scaling, albeit at a slower pace than the L2s are, but a lot of the L1 scale, like such as 4844, is going to improve the layer 2 scale, and all just feeds up the chain here. Now, Polynia talked mostly about this concept of an enshrined zkEVM. Now, what this means is basically having the zkEVM at layer 1, but still offering the scalability that a layer 2 would. And this comes with certain trade-offs that I think are mostly untenable for pretty much like everything, maybe but most of the L2s, I should say here, because the major trade-off is that if you are enshrined at layer 1, it means you have to go through the layer 1 governance process if you want to change anything about that rollup, and no one team would own that rollup. It's not like it'd be the Arbitrum zkEVM or the Polygon zkEVM or whatever it is. It would be an Ethereum zkEVM. It would literally be part of the core protocol. It would not be built on top. It would be enshrined as part of the core protocol. Now, because of that, it would mean that the thing belongs to the Ethereum community. Right, all the governance decisions have to be made by the same governance process that the Ethereum core protocol goes through, which adds obviously a lot of overhead to the core developers and researchers and a lot of overhead to the governance side of things, and also limits the speed at which that zkEVM or enshrined rollup can innovate, can change, and honestly, it's not a great thing from that perspective. The benefits of this, though, are that it really makes it so that if the L1 zkEVM, or I guess like L1 rollup, enshrined rollup generally gets a lot of traction, it can't just pick up and leave and go to another ecosystem because it is part of the Ethereum core protocol. Now, I don't think that risk is actually something to be worried about, to be honest. I honestly don't think it's actually easy for an L2 to change where they're settling on. I don't think, for example, Arbitrum 1 could just one day say, okay, well, we're no longer settling on Ethereum, we're going to go settle on another L1, because there is a lot of considerations there. Chief of those considerations are the assets and the assets bridged across, because those assets are bridged into Arbitrum 1 from Ethereum. So you would have to do a lot of groundwork and a lot of migrations and just to kind of port it over. And then what would you be porting over for? Does this L1 have anywhere close to the activity of Ethereum? Probably not, because none of them really do, right? So I just don't consider it a big risk there. But that is a major benefit, where it's basically, because it's enshrined as part of the core protocol, it basically means that it's at like no risk of kind of like fleeing from the ecosystem, because it literally can't, right? Because it's part of the core protocol. It's not just something that can change where it settles. Another big benefit would be that it allows for, I think, just more compatibility with the chain and true kind of like type 1 zkEVM, like fully equivalent to Ethereum, which can still be done at normal L2s. So yeah, as I said, there are trade-offs, there are pros and cons here, but you definitely recommend reading Polyniar's post, which I'll link in the YouTube description below. But on top of that as well, I think the reason why I think enshrined rollups are a cool idea, but honestly will probably cater to a niche market, is because with the normal L2s, with the normal rollups, what we get is a very expressive development ecosystem, where we don't just have one community focusing on one thing, where it's limited by one thing like the Ethereum protocol. We have many communities, many teams, many projects focusing on many things, which gives us a lot of innovation. And Polyniar actually makes the note that without all of the L2 innovation that we've had, an enshrined rollup wouldn't even be possible, because we wouldn't even have the concept of a rollup to begin with. So and innovating at the L2s can be done a lot faster. They can move a lot faster. Yeah, yes, they're not like truly decentralized from day one. Yes, they have to work at that. That's another very big positive of an enshrined rollup, where they basically just automatically inherit everything that the layer 1 already has. They don't have to design for it. It's basically part of the design from day one. It's out of the box. But again, like, I don't think that's that big of a deal. I don't think that's something that's actually going to move the needle and get people using the enshrined rollup instead of these L2s. And I don't think it's a positive thing that an ecosystem or an L1 only has an enshrined rollup and doesn't have an expressive set of diverse L2s building on top of it. I much prefer the latter option of diverse L2s than an enshrined rollup. Not to say that I don't want to see an enshrined rollup come to market, or even like a hybrid of it, where you could essentially have the L1 doing sequencing for the L2 rollup, so that it has truly decentralized and censorship resistant sequencing without having to use a token to do that. That could be something that gets done in the future, but generally, I just much prefer the expressive L2 kind of like Cambrian explosion approach, which of course I'll link the blog post in the YouTube description below so you can learn more about this. But that's just my general view on things, and we'll have to see how things evolve from there. All right, finally here, I just want to announce that this new fund launched by Victor Bunin and Lisa Bunin here called Credibly Neutral has gone live. Now, the reason I'm talking about a new fund launching on the Refuel, which I don't usually talk about these sorts of stuff, but the reason I am is because I am an LP or a limited partner in this fund. Now, someone asked the other day or got confused about what the term LP meant. So normally when you use the term LP when talking about kind of like Ethereum or crypto, you mean like liquidity provider, right? Like you provide liquidity on Uniswap or something like that. Whereas in the VC world, LP means limited partner, and it basically means you're a liquidity provider because you're just investing in the fund. You're investing your own capital in the fund. And that's exactly what I have done in Credibly Neutral. Now, this is the first and probably only fund, maybe I won't say only fund, but it is definitely the first fund that I've LP'd with. On Bankless's side, the Bankless VC, I'm only an advisor. I'm not also an LP with them, but I am an LP with Credibly Neutral. And the reason is mainly because Victor has been a good friend of mine for a very long time. I know how he operates, both on, as an investor, as a community member within kind of the crypto ecosystem, as someone who's worked on a lot of things. Like before he was at Coinbase working as a protocol specialist, he was working at Bison Trails doing the same thing. And I've had a lot of conversations with him and we align on a lot of different things. I've met him a bunch of times. I don't think I've ever met Lisa, but I have definitely spoken to her a few times as well. And she's great. And she actually also works at Aztec as the chief operating officer there. But the reason why I kind of like gave them my capital to invest is because I just think that they're two awesome people and that they know and they align with a lot of my values and a lot of what I care to see are funded and built in this ecosystem. So the fund itself is a early stage venture fund investing $50,000 to $250,000 in protocols, infrastructure, and crypto SaaS or software as a service solutions here. And there's a thread here from Victor that you can read. I'll link it in the YouTube description below. And the total announcements to date, I think, is about 6. So they really are targeted with their investments. They're not just trying to be like spray and pray, invest in everything. They really want to invest in things that they have high conviction on, which is another reason why I kind of became an LP with them, because I just aligned on that as well. I really want to just kind of invest in things that I can see actually being value add, especially to the Ethereum ecosystem, but also crypto more broadly, which is exactly what Victor and Lisa are doing with their Credibly Neutral fund here. So congrats to them on launching the fund. Very proud to be an LP in them, but just wanted to talk about that a little bit, but because obviously I'm involved with it, but also the massive disclaimer and disclosure that everything that that Credibly Neutral invests in, I have exposure to. So that's just something that I'll be disclosing going forward as well. But also I have spoken about that website with all my disclosures on it so many times at this point that I just need to put it live. I think I need to at this point because it's going to be hard for me to keep track of everything that Bankless is investing in and everything that Credibly Neutral is investing in. And I want to disclose those things for you guys because I don't want you guys ever feeling like I'm shilling you something or trying to sell you something or trying to kind of like pump and dump bags or anything like that. That is not what I'm here to do. And that's why I always disclose these things to you guys so you can make your own informed decisions on that front. Now, finally here, before I move on for today, just a quick thing that I wanted to talk about. How about those gas fees, guys? This is insane, right? Like, we've actually sustained over like 30, 40 Gwei for many weeks now. And I was actually looking at the Ultrasound Money website the other day. Actually, I probably was looking at it today because I love this website. But if you scroll down a little bit, if you change this time frame here to 30 days, we have been above the ultrasound barrier for 30 straight days. This has never happened before, guys. Now, what is the ultrasound barrier? Well, right now it is sitting at 17.4 Gwei. What this is basically saying that as long as the gas fees are above that amount, we are net deflationary. So we have been net deflationary for 30 straight days. Now, if you go 231 days, and this is since the merge, you can see kind of like that we've been above this ultrasound barrier for quite a while, right? And at times we've been above it a lot, with only dipping below it very briefly. Now, what has this resulted in? Well, over the last 30 days, we have burnt, let me just do this here, we have burnt we have changed the supply by 71,000 ETH. So it's gone down by 71,000 ETH. We have burnt a total of 126,800 ETH, which is equal to $243 million. This is just crazy to me, guys, the amount of ETH that's being burned here and the fact that ETH supply has kind of peaked since the merge. Because since the merge, the supply has gone down by almost 150,000 ETH here, which is equal to equal in US dollars, almost $1 billion US dollars at the ETH price that it was measured at there, which is just insane. But yeah, these high gas prices on layer 1 are not nice. I did warn about this a few months ago. I said enjoy the low gas prices while they last, guys. Like, I think we were a sub 10 Gwei for a little while, but I did say enjoy these low prices because they are not lasting very long. And you know, hopefully you took the opportunity to do what you needed to do on L1, get onto the L2s. You don't have to go through L1 to get to these L2s anymore. You can go through the centralized exchanges like Binance and Coinbase and stuff like that. So it's less of a concern these days that the fees are this high, but still, it's kind of crazy. And what's been driving it, particularly over the last 7 days, actually, has been a few different things. You can see here that the usual suspects are in the top list, but Zen Crypto has been a big burner of ETH. Uniswap obviously is a big burner, but there's also these meme coins that have been trading a lot on things like Uniswap. So those things have been driving it. But man, we're at 75 Gwei right now. We've actually been, like, if you go over the last 7 days, since the 30th of April, so about for 5 days now, we've been above 30 Gwei. We've actually been like as high as pretty much like 50 to 70 Gwei for that entire time period of the last 5 days, which is pretty crazy. But yeah, I just wanted to kind of talk about that for a little bit because everyone's been talking about the gas fees lately, but figured it was something interesting worth talking about and just amazing to see how much ETH is being burnt here. But on that note, that's going to be it for today. So thank everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks, everyone.